Thank you for joining us today. Today we're going to talk about if you need 20% down to buy a house. If we haven't met before, my name is Monica Brito, and I am a mortgage loan officer, and I've been in the real estate business for the past 15 years.
And I'm Keia Blake, and I'm also a mortgage loan officer, and I've been closing loans for about 12 years.
Awesome. So I thought it would be a good time to talk about the different programs that are available for purchasing a house. We talk to people all the time who assume that they need 20% down to buy a house. Yes, in the perfect world, yes, we do want to have 20% down because we avoid PMI or private mortgage insurance on top of it. But what other options are available? I think I noted down a few of them here. The first one we can talk about is USDA. Can you give us a little bit of insight on the USDA rural financing?
Yeah, so USDA rural is 0% down. The only qualifications on it, well, there's a few, but it has to be in a rural area, which is deemed rural by the USDA. So there's a website you can check addresses on for that. And then income qualifications, you can't make too much money to qualify for that one. So,
okay, so that's a 0% down loan. There's income and address limitations, but other than that, it's available.
Other than that, it's a.
Okay.
Yep.
So I think a lot of people think that that's only available during certain times of the year, but that's a year-round program. So that's a pretty awesome program.
It is.
And then the next 0% down availability is VA for those who are veterans or active duty or have been in the military before.
Exactly.
What are some things that we should know about that loan program?
I mean, really, you just have to have the veteran qualification with your DD 214 forms, and otherwise, I mean, it's a great loan if you're a veteran. So
awesome, and that's just there's no PMI, just 0% down. And
0% down, no PMI.
Awesome. That's a great loan program too then. And then the most traditional one, and I think I don't know if you hear this, Keia, but I always hear, oh, do you have first time home buyer loans? And what they're really talking about is FHA. But I think people call FHA a first time home buyer loan because it has such a low down payment. So it's 3.5% down on that particular one. What are some of the things we should know about FHA?
So FHA, it does have a set mortgage insurance. It's 0.85% monthly, and that's for the life of the loan. But income qualifications they don't really have income qualifications, credit scores. It's kind of their debt to income ratios can be a little bit higher. So it's a great loan for first time home buyers, but you don't have to be a first time home buyer to use it.
Okay, awesome. So the only really bad thing I think that I could say about FHA is that there are parameters as far as the property is concerned. So the property needs to be in semi-good condition. And then the other thing is that if you want to get rid of the PMI or the MIP, as called in FHA, that you have to actually refinance the loan. It doesn't just fall off like you would on a conventional PMI. But other than that, it's amazing. I know the rates are usually lower than conventional.
They are.
And once again, you can qualify for more because the DTI is a little bit higher. So let's talk about conventional then. Conventional doesn't necessarily have to be 20% down. What's the lowest you can go on conventional?
3%. You do have to be a first-time home buyer. There are qualifications for it, but the lowest you can go is 3%, and then on up from there. 5% I see a lot, 10%, and this is on primary residence. If it's a second home, it's 10% minimum. If it's an investment property, 20% is the minimum. So.
Okay. And then there is PMI if you don't put 20% down, but is that lower the more amount of money that you put down? So if you put 3% down, your PMI is going to be higher. And then if you put 10% down, it'll be lower.
Right. Yep. And your credit score also plays into that too. Yep.
Okay, cool. So awesome. That sounds really good. It's kind of nice to answer that question for people because that's One of the ones we get all the time is, oh, I don't have 20% down, I can't buy a house. But yes, you can. There's programs out there available for you.
There's definitely options. Yep. So
awesome. Cool. So I guess that wraps us up, and be sure to join us next week, because we're going to be talking about credit scores and where your credit score needs to be in order to purchase a house. Thanks so much for joining.
Thank you.
Bye.
Thank you so much for joining Keia and myself today. Our goal is to help you make the mortgage process simple. If you're ready to apply for a mortgage loan, or maybe you're thinking about buying in the near future and want to see what you can qualify for, go ahead and click on the link below and apply today. Please be sure to choose either Keia Blake or myself, Monica Brito, as your mortgage loan officer. If you have any further questions, please feel free to reach out to us via email. Our email addresses are posted below. And if you would like to follow us on social media, you can follow us at the below handles, either on Facebook or Instagram. If you like the information that we're giving you today, be sure to like and share, and we will talk to you soon.